Today was obviously not a great day for AMC. AMC stock down about 8%. Yikes. That's a rough one. But here coming tomorrow, there's going to be a major catalyst that you need to know about. There's actually going to be two of them that could move AMC quite a bit. I want to let you guys know exactly what these catalysts are and what my expectations are for AMC stock. We have a lot of work to get into. We're going to get into it here in this video. Hit that like button and subscribe to the channel. If you guys have not done so already, consider sticking around a while. So let's just briefly go over the narrative of the day today. What's doing well? Well, Nvidia's up 1%, Apple's up 2%, Microsoft's up 0.5%, Tesla's up almost 2.5%. Big tech is doing okay. It's being seen as, to some degree, a safe haven for equities, right? Imagine it like this. If you go into a recession, what stocks would you rather own? Well, Wall Street is saying they would rather own the big tech names than small and mid-cap names. Well, why is that? Well, small and mid-cap stocks, they're very sensitive to the economy. If money dries up and people are no longer spending money, a lot more of your small and mid-cap companies are going to go bankrupt. Apple, no way Apple goes bankrupt. Microsoft, not a chance. Nvidia, not a chance. Tesla, not a chance. Small and mid-cap stocks, well, you can't say the same. That's the point. Today was all about a recession. The recession reigned supreme today. You can see this in 10-year treasury yields that absolutely plummeted. 10-year treasury yields down about 11 basis points today. Today alone, that's almost equivalent to half of a rate cut. You can see this in the Fed rate monitor tool that is now pricing in a rate cut for March. We've been pricing this in, but pricing it in with a higher probability today. But for the first time, you're now pricing in a rate cut for May as well. Just yesterday, you were pricing a rate cut for March, a pause for May, and then a rate cut for June. Now, you're pricing in a rate cut March, May, June. Let's see. July, you're pricing in another rate cut. September, you're pricing in another rate cut. November, you're pricing in another rate cut. And December, let's see. December, you're actually pricing a hold, but it's close to pricing in a rate cut. For December, there's a 28.6% chance of another rate cut. So that would be a rate cut in March, May, June, July, September, November, and December. There's a 28.6% chance of that. There's a 30.4% chance that you still have a rate cut in March, May, June, July, September, November, and pause in December. So that's a lot of rate cuts being priced in. Not good news for small and mid-cap stocks. In terms of interest rates, sure, that's great news for small and mid-cap stocks. But what does that imply for the economy? Well, not so great things. So that's not great. And that's really the narrative today. Now, why is that the narrative today? Well, ISM Services PMI came in better than expected. This doesn't even matter. This isn't the story of the day today. The big story is the amount of job openings just fell about 20%. About 600,000 job openings, poof, are gone. You're now at 8.73 million job openings. This is the lowest since March of 2021. Now, job openings is interesting. How you get more or less job openings is simple. Well, you'll get less job openings if companies pull back and they don't need to hire as many people. Or if jobs get filled. So on Friday, we'll see if jobs are actually getting filled or if it's just, companies not needing to hire as much. You could see the trend of job openings. You're really starting to fall here. Your pre-pandemic numbers were around 7 million job openings, 6 to 7 million. You're getting down to a more normal level, right, for pre-pandemic job openings. So this is good on one hand for wage inflation. There's not going to be as much wage inflation, but with job openings falling from 12 million to 8.7 million, yeah, that's a lot less jobs that are needed in the economy right now. That's very recessionary. Now, tomorrow's data is going to be very important as well. The ADP employment change. This is the private payrolls. Last month, you did miss. So last month, we were expecting a higher number, and it came in at 113,000. If you miss again, that's probably not going to be seen as good news. You're expecting 130,000 job ads. So if we come in under 100,000 or under 80,000, that's not going to be good. Under 50,000, really bad. If we were to be negative, that's like a 4% down move, probably for the markets. So that could have big implications. Why? Well, the ADP employment change is the private jobs, private sector. Now, the non-farms that we're going to get on Friday are everything. So the ADP employment change is the closest data report that we'll get in regards to the non-farm payrolls. So if this comes in really bad, payrolls are likely to come in really bad coming on Friday. And you know what's interesting about this? Tomorrow's ADP employment change will likely price in a forecast for the non-farm. Let's say, for an example, just to try to break this down as simple as possible. Let's say the ADP employment change were to come in at 25,000 job ads, 105,000 lower than expectations. Well, the markets are going to say if the ADP came in this week, the non-farms on Friday are going to come in really weak. Then you'll get expectations that start to price that in for non-farm payrolls. We're expecting 180,000 job ads. Maybe the estimate drops to like 100,000. The markets might react to that coming tomorrow. And then if you obviously have a better than expected number on Friday, stocks might rally on that, right? So it's kind of like say for an example, Snapchat and Facebook, right? They're kind of both the same business models. Advertising, social media, things of that nature. Well, Snapchat and Facebook tend to move together. So say Facebook has terrible earnings and Snapchat reports earnings the next day. Well, odds are Snapchat's going to fall big time as well and going to price that in. Because if Facebook's likely to have bad earnings, Snapchat's likely to have bad earnings. We actually just seen this sympathy with solar companies. Solar converter companies like SolarEdge and First Solar, right? SolarEdge had really bad earnings. They guided down ahead of earnings. What happened? SolarEdge and First Solar and all these other solar names were down like 20% the next day because of that sympathy move. Same thing with the data here. If ADP is really good or really bad, markets will price that in as the most likely outcome for Friday as well. So tomorrow, I expect to get quite a big move based on that. Now, specifically with AMC, we are setting ourselves up for GME earnings coming out tomorrow in after hours. Now, GME is set up in a way, it's very low, right? Let's go ahead. GME is down 11% today. That makes it easier to beat and go higher coming on earnings. Most likely. I mean, look at the stock overall. It's down quite a bit from where it was just back in July when the stock was almost $30 following Q2 earnings. What's happened? You've fallen from after Q2 earnings at about $28. you're still down about 45% from there. How hard is it going to be to rally 20% after earnings? I would argue not as difficult as maybe it otherwise would be. A 20% rally from here in GME would send the stock to $18. A 35% rally would send the stock to about $20. That's possible as well. That's very possible, in my personal opinion. What will that do for AMC stock? Well, likely what we've seen recently, right? When GME rallied, AMC also rallied. So my expectation is we're probably going to get positive earnings from GME, and the stock's probably going to go higher. Now, I'm actually looking at making a trade on GME earnings. I think it looks kind of attractive on a risk to reward basis. If you guys want to come trade with us, check out that link down below in the description of this video for the trading community. But nonetheless, that is one that I am watching very closely. I do think that will give AMC a positive sympathy reaction as well. Now, AMC, as far as this week in particular, has a lot of option activity. So if we look at the option chain, this is something I've highlighted and talked about, multiple times. The $7 call has 12,000 for open interest. The $7.50 call has 23,000 for open interest. The $8 call is about 21,000 for open interest. The $8.50 call has 11,000 for open interest, and the $9 call has about 69,000 for open interest. So some very high numbers that you are seeing here. If you do get that sympathy reaction from GME earnings, if you do get data that maybe supports the economy is holding up, and we're still going to get a lot of rate cuts, which is strong possibility, then I see no reason why AMC will not rally the rest of this week. I think that would be the most likely outcome, that AMC can rally pretty aggressively here, considering the stock is very oversold. We already got our dilution, right? We've got diluted. That's no surprise to anyone. Are we going to get diluted here in the near term anytime soon? Probably not. I would make the argument that you can't. If you're Adam Ayer and AMC, you can't dilute shareholders again for quite a while. It's just not something that went over well last time around with AMC shareholders. So think that sets us up for a rally personally. Where we need to break out above is $8.63, that 50-day moving average. If you break out above that, then you can start to break above 9, get above that 69,000 open interest strike at $9, and that could set you up for quite a big move higher. 69,000 for open interest is about 6.9 million shares that would need to be bought by the market makers, and that would be potentially great news for AMC stock. So we will see. Let me know what you guys think down below in the comment section. What do you guys think about tomorrow with GME earnings as well as the ADP employment change? Did that breakdown that I went over make some sense to you? Now, before we go ahead and wrap up this video, a quick update as far as the short interest numbers for AMC. Keep in mind, I don't believe these are true, but with that being said, I don't think they're true. So that's why I'm in positions in AMC, long positions. If I believe these numbers were true, then I would not be in a long position in AMC. Now, you do have 10.65% short interest off your float, 157.8 million shares that are currently sold short, days to cover 0.91 days, 21.07 million shares that are currently sold short, shares out on loan 15.16 million, cost to borrow 1.17%, utilization of 36.75%, and a short score of 58.07 out of 100. And again, looking at the option activity for the entire day of today, you are seeing 4 orders totaling $254,000 with a positive order value of 62%. Volume today is about 2 to 1, 2 times as many calls compared to puts, about 67.28% call volume and 32.72% put volume. So some pretty good numbers that we're seeing across the board as well, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.